Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So this is the last video on incomplete records, the last and final problem number 12 I am going to explain in this video. So many videos I have prepared on incomplete records. Hope my regular viewers are watching all the successive videos. If you join in between, you will not be able to understand. So if you want the perfect knowledge on accounting of IGCSE course, so watch the video from beginning. First video, theory video, I have explained you about the meaning of incomplete records. So how the financial statements will be prepared from incomplete records. I have explained completely what are the disadvantages of maintaining incomplete records. Then how to find out the profit when accounts are incomplete. Two methods I have explained, comparison method and conversion method. In comparison method, simply we compare the opening capital with the closing capital. So closing capital minus opening capital, the resulting figure is the profit. If positive comes profit, negative comes loss. Suppose if there are any drawings, the drawings will be added. So how to find out the profit? Take the capital at the end of the year minus capital in the beginning of the year plus drawings. If further capital is introduced during the year, that should be deducted. Like this, by comparing the capital, we can find out the profit. But one more method is there called conversion method. In conversion method, we complete all the accounts. First of all, the accounts are incomplete. By opening some accounts, by making some adjustments, we complete the accounts, and as usual, we make the income statement and statement of financial position. As of it is a complete system of bookkeeping, double entry system of bookkeeping. So all these things I've explained in the first video. So I suggest you to watch the first video till the end. Then starting two videos I have prepared for short questions and MCQs. So be thorough on those short questions and MCQs, then definitely you will not find any difficulty in main problems. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So before watching any problems video, first of all, go to the description, last line you will find the link, take a printout and keep it ready. So now take a screenshot of the solution of 12th problem, then I'll explain in detail. Come on, see the 12th problem. Mr. Peter Foe started business on 1st Feb 2016. He prepared his trading and income statement for his first year of trading. The following balances remain in his books at 31st Jan 2017. So he started, Peter Foe is the sole trader. He has started the business on 1st Feb 2016 and 1 year ends on 31st January 2017. So on 31st January 2017, what are the balances in his accounts? Capital 1,45,000, inventory 17,500, trade receivable 19,200, trade payable 29,000, premises at cost 90,000, equipment at cost 50,000, bank 300 debit. Sometimes bank will show credit balance, sometimes debit balance. Debit means asset. If credit balance comes, it's bank overdraft liability. Then petty cash, this is the cash in hand, current asset. Drawings are 10,400 and profit for the year 13,500. So already profit is calculated, no need to make the income statement. Only we have to make the statement of financial position. Next page you can see some adjustments are given. The following matters were then discovered. That means after calculating the profit, some adjustments were there which are not adjusted. Now we have to make the adjustment. No adjustment had been made for wages owing at 31st Jan 2017 amounting to $200. Wages are owing, outstanding. How much wages? $200 wages are there. These wages are not adjusted. So we, according to accrual system of accounting, we should take all expenses whether paid or owing. Here wages paid are already taken, but wages owing are not taken. So now we deduct $200 from the profit. The profit we got is 13,500. From 13,500 we deduct $200. This is for wages owing. Then during the year Peter 4 had taken goods costing $600 for his own use. This transaction had not been recorded in the accounting records. This does not affect the closing inventory on 31st Jan 2017. So the owner, sole trader, Peter 4, he has withdrawn some goods. He has taken away some goods from the business for personal use. It is called drawings. So $600 worth of goods he has taken for personal use, drawings, and that is not considered. Now we consider already drawings are given. The drawings are given in the trial balance 10,400. Now here some more drawings are there. 600 worth of goods are taken over. So 10,400 plus 600, 11,000 are the total drawings. So drawings we take 11,000. You can see here. Drawings are 11,000. Next one is equipment should have been revalued on 31st Jan 2017. The estimated value at that date was 47,000. Actually, equipment cost was 50,000. In the trial balance, equipment cost is $50,000. But in adjustment, it is saying it is revalued at the end of the year. Now its value is 47,000. That means 3,000 rupees equipment value has decreased. That is depreciation. So depreciation on equipment 3,000. So you can see here equipment is there. Cost of the equipment was 50,000. Depreciation 3,000. And the revalued at the end of the year the value is 47,000. Right? There is no depreciation on premises. Nothing is given in adjustment. So whatever premises value is there, the same premises value carrying there. Now, the bank statement received on 31st January showed that the bank had debited the business bank account with charges $1,050. This had not been recorded in the accounting records. At the end of the year, when bank statement was opened, it is seen that the banker has made bank charges $1,050. $1,050 is the bank charges. The beginning of the end of the year, the bank balance was showing $300 debit balance. So without considering this bank charges, the bank balance is showing $300. But bank charges we have not included. Now we include bank charges. So from the banker will deduct bank charges from the account. So already bank balance he is having only $300. The banker is deducting bank charges how much? $1,050. So ultimately negative 750. 300 minus 1,050. $300 was there, but banker has taken 1,050. So negative balance 750. This is bank overdraft. So this bank overdraft should be taken in current liability. Bank overdraft 750. Next is the cost of delivering goods to a customer. $150 was debited to carriage outward account. The customer had agreed to pay the delivery cost and this amount should have been debited to his account. $150 delivery charges have been paid and the business has charged these delivery charges to carriage outward. But the customer has agreed to pay that $150. So there is no need to charge carriage outward. By charging carriage outward, the profit has decreased. Now we have to add back $150 to the profit because it is now our expense. It is not our expense. The customer has agreed to bear that delivery cost. So we have to add that $150 in customer's account. Customer account means trade receivable. In trade receivable we add how much of the trade receivable given in the trial balance? That is 19,200. 19,200 is the trade receivable value. Here $150 also agreed to be paid by the customer. So this $150 will be added. Trade receivable as per trial balance 19,200 add delivery cost to be added to customer account 150. So total 19,350 is the trade receivable. So here you can see trade receivable 19,350. Then prepare a statement of financial position for Peter 4 at 31st Jan 2017, taking the above matters into account. After considering all these additional points, prepare the statement of financial position. So here you can see Peter 4 statement of financial position as of 31st Jan 2017. First of all, non-current assets. Non-current assets will take assets. Two assets are the premises, equipment. The premises 90,000 value, no depreciation at all. So same carrying value 90,000. For equipment, the cost is 50,000. But in adjustment, it is saying that at the end of the year, its value has come down to 47,000. That means 3,000 rupees, $3,000 is the depreciation. So 50,000 minus 3,000, 47,000 carrying value. Add up 90,000 plus 47, 1,37,000 is the non-current asset. Now current assets, we have inventories. As it is, whatever inventory value is given, that is 17,500, same 17,500 I have taken. Trade receivable, here it is given 19,200. 19,200 trade receivable. But adjustment, I told you, $150 delivery cost had been agreed to be paid by the customer. Customer had agreed to pay $150. So $150 will be added. So 19,350 is the amount due from customers, trade receivable. Bank balance nil. Because we don't have positive bank balance, we have negative bank balance. When negative bank balance is there, it will come under bank overdraft. The trial balance, bank balance is given 300. But adjustment, it is saying that bank charges are 1,050. The banker will take 1,050 from our account. So this 1,050 is an expenditure. So 300 minus 1,050, 750 is bank overdraft. So here I have taken bank overdraft 750. Next comes so inventories, trade receivable, bank, cash. Cash is the petty cash. Whatever is given in the problem, petty cash directly we have taken. Now take the total of these three values. 36,950 are the current assets. Non-current asset 1,37,000. Current asset 36,950. Add up both 173,950. This is the total of assets. Now equity and liabilities. Opening capital. Opening capital is given in the problem 1,45,000. So 1,45,000 opening capital. To this we add the profit for the year. But profit for the year is given 13,500. This 13,500 profit is incorrect because adjustments we have to make. Now I'll tell you what are the adjustment to be made in profit. Profit for the year as per the trial balance 13,500. From this all expenses we deduct and incomes we add. First of all, depreciation. Adjustment, it is saying that 3,000 rupees is the depreciation on equipment. 3,000 is the depreciation on equipment. So this depreciation is deducted. Depreciation provided 3,000. Deduct 3,000, 10,500. Next, carriage outward. Actually, $150 carriage outward is the delivery cost. Delivery cost was taken in carriage outward. But the customer has agreed to bear the delivery cost. So why we should charge to carriage outward? Because carriage outward was already debited. So our profit has been reduced. By charging to carriage outward, our profit has been reduced. Now we add back that carriage outward. Carriage outward wrongly debited 150. Add up. Then bank charges. Bank charges is an expenditure. So all expenditure should be deducted. So 1,050 bank charges deducted, 9,600. From 9,600 deduct wages owing. Wages outstanding is current year's wages. So outstanding wages $200 deducted, 9,400. Now finally, goods were taken over by the proprietor owner for personal use 600. So that 600 we have to add to drawings and also we have to add to the profit. Add to the profit. So 600 rupees goods taken for personal use. So total adjusted profit is 10,000. Now take the 10,000 profit here. 1,45,000 capital. Add 10,000 profit, 1,55,000 minus drawings. Actually 10,400 is the drawings given in the trial balance. 10,400. To this we add 600 goods taken. Here drawings as per trial balance 10,400. Add goods taken for personal use 600. The total drawings will be 11,000. So here total drawings 11,000. Deduct 11,000, 1,44,000 is the equity capital. Now non-current liabilities are not there. Bank loan, etc. Long-term loans are not there. Simply for the sake of remembering that point, I am writing non-current liability nil. Then current liability trade payable. As it is, $29,000 are given, same, no adjustment, nothing, directly 25,000. Bank overdraft 750. How we got this overdraft, I told you. At $300 were there in the bank, but banker has taken 1,050 bank charges. So there is a negative balance of 750. That is bank overdraft. Accrual. This accrual is nothing but the wages outstanding, wages owing. Accrual are wages owing. That is $200. $200. That's a liability. Wages outstanding is a current liability. So $200. Now take the total of these three, 29,950. So we have equity and current assets. Add up both, we got 1,73,950. This is the total of equity and liability. And this is the total of assets. So when the total of assets and total of liabilities both are equal, that means our solution is correct. We have not committed any mistake. That's why total of assets and total of liability will be equal. If we commit any mistake, then the total will not be same. That's it. Right now the total is same. That means we have done correctly. So this is the end of 12th problem and also the end of the topic incomplete records. So I have explained you all the 12 long problems and so many short problems on incomplete records. If you want the perfect knowledge, watch this video again and again, 2-3 times. If you watch the video, definitely you can be able to remember the points. In one stroke, if you watch the video only once, you may not be able to understand so much, twice, thrice. So if you are satisfied with my lecture, give a like to the video, give your comments, share my channel among your friends circle so that more students can watch the video and enhance the knowledge. And lastly, don't forget to subscribe my channel. Inshallah, next video I'll take up the next topic.